So understanding how to trade supply and demand zones is one of the best ways in which you can maximize your profits, catching very high rewarding trades where price will usually tap to supply zones like this and you sell, and you are going to find out that price will most often drop powerfully, or if price comes down and hit in a demand zone, you are going to realize that price will mostly move up. So this is a supply zone example, and in this video I'll be sharing with you a couple of things in which will be very beneficial to you. You can see how price drop off after hitting the supply zone, so you need to learn how to trade them, and I'm going to share with you a couple of things. As a total beginner, you can trade this just from watching this simple short video. So you are going to see how, what these zones are, how to identify and plot them out, how to place your entries. Either you use the direct entry or you wait for confirmation, what we call the change of character sniper entry, where you can catch very good moves while trading supply and demand, or you can improve your profitability by trading it. So make sure you stick to the end, and if you like to always see videos like this, make sure you subscribe to the channel. Before you continue, just hit on that subscribe button and notification bell to see more content like this. All right.
Okay, traders, welcome to my channel. I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out.
Supply and demand zones are simply key levels in the market where let's say the higher liquidity or liquidity is actually available, where most banks, most institutions will be willing to be selling or to be buying, and there are some parameters in which you can use to identify supply and demand zones. Right now I'm going to share with you from this example, and I'll share with you simply how to enter. Okay, now if you look at this chart example here, let's go to this. So if you look at a market, for instance, like a downtrending market like this, you see that there are many institutions that will be looking to be selling at a higher price, and buying at lower price. There are many traders, and those zones are very good zones where price will usually drop off, especially when it pulls back to those zones. Right now, like the second thing in our course outline was how to identify the supply and demand zones. Right, so if you look at our bear chart here, from where you can see a lot of momentum, price dropping down. This is an example of a situation where we have much liquidity and supply zones are usually formed. In this situation, to identify a supply zone, you look for what we call the last candle, the last bullish candle that was formed before a bearish move. All right, because after this consolidation, you realize that price drops powerfully, and from here we have liquidity. There's money here waiting for price to pull back. So in order to identify a supply zone in this situation, what you do is you identify the last candle. So this is the last green candle that was formed before this strong bearish move, and you can see that from here we have very strong bearish candles indicating the presence of banks and all of that. So you can see very strong bearish candles and all of that. So what you do now to identify and plot them according to our course outline, you simply mark out this zone here. Right, you mark out the zone where you see these candlesticks, the last bullish candle that was formed before this strong bearish move. You can see these are only red candles, and you wait for price to come back and tap to the zone. Right, when price tap to the zone, what you can do, number one, because in our course outline we actually talk about how to identify and plot them. We have looked at how demand and supply zones, or what they are. Now you look at two entries. Number one could be our direct entry, in which I'm about to share with you, and we are going to look at the confirmation, which is the change of character. So now going back to our chart, you see now that using the direct entry, once you identify this zone, you can place what a sell limit order 50% of this zone that you mark. Realize you can use this candlestick, you can use a rectangle tool, you mark from the top of that green candle to the bottom, as you can see right there. So we have this to be the green candle here. Right, so you mark from the top to the bottom and wait for price to hit 50% of it. So, and one way you can do is just place a sell limit order 50% of this candlestick, and then your stop loss above these candlesticks here. All right, so because price sometimes, once it comes here, it just hit the zone a little bit. If you are not fast, it drops off powerfully. So if you had your limit order here, you have been executed and you have some pips running already. Okay, so that's the direct entry, and the second entry is you have to wait for confirmations. Right, so now let's just use our replay tool so that price get to the zone here. Right, you can see there now price has already tapped to the zone. this is already at least 50% now. This is where we enter. Our stop loss is above there, and then we place our first target at this previous low here. So this is where our first target will be. All right, our first target at this previous low, our stop loss above there, and this is our entry. So this is already like a 1:3. All right, that's the direct entry. And let's see, right, price drops off powerfully. That is the first entry method, which is a direct entry. Now the second entry is based on what? Confirmation. Okay, now what you do now is, once you have marked out the zone in a bigger time frame like this, right, where you saw price came down, consolidated, because you can see here after the strong bearish candle, this is the only consolidation that we have here. This is another way of identifying demand supply zone. You just look at where we have consolidation, candlestick consolidating, and all of that. If you drop further to even smaller time frames, you are going to see better, right? So you see where price consolidated, before dropping like here, and then you identify them. So let's go down to the next entry method, where you see the confirmation. Now, to use the confirmation method, you go to a smaller time frame, right? So we have identified the zone. This is the H1 time frame, for instance. Okay, this is the H1 time frame that we identify the zone from. And once you identify the zone from the H1 time frame like this, let's replay. What you do now is you drop two time frames are lower. So from the H1 time frame, this is H1, right? You drop to the 30, 15, over to the 5 minutes time frame, right? So when you drop to the 5 minutes time frame, what you're going to do now is what? You wait for price to start pulling up. Okay, as soon as price start pulling up, you are going to realize that price is going to be creating higher highs, right? So we basically have something like this. Let me just do a demonstration. Let's say this is the supply zone. Let me just demonstrate it. This is the supply zone that we have in a bigger time frame. Maybe price was moving and then created the supply zone. So once price move and create a strong impulsive move downward like this, right? So you are waiting now. You have marked out your supply zone up here. So you are waiting for price to come back here to enter. But what you do now, you drop to smaller time frame. Now, if you drop to smaller time frame, you realize that price will be creating higher highs. As soon as price is pulling back to that zone, price will be creating higher highs. And once price creates and hit to this zone here in the bigger time frame, right, you will not just enter because you want to wait for confirmation. You wait for price in the smaller time frame now to come down and break structure. So when it breaks structure, because if you look at it very well, this at that moment, price is only creating higher highs, right? So price is only creating higher highs and higher lows, higher highs and higher lows, until when it taps to this zone, it comes down and breaks this higher low. So when it breaks this higher low, what happened? It now confirms to us that there's a breakout structure. So here now in a smaller time frame, we mark out our smaller time frame supply zone like that, right? We wait for price to come back now and hit, right? So I'm just demonstrating. I'll share you in this live chat. You wait for price now to come back and retest. When it retests, now we sell here. This way we are selling our stop loss above there, and then we target this zone. You see that price will drop. So you see that what we identified the H1 time frame zone, we marked out, we drop to a smaller time frame, we look forward structure, market structure, as price is getting higher highs, higher highs. Once price hit to this zone here, which is in the bigger time frame, we don't enter immediately. We wait for price to come down and break structure, then wait for price to come back and test the zone, and then we enter. So let me share with you. Okay, so this is the zone that we have in a smaller time frame, right? So remember, this is the euro US dollar. This is the zone that we marked in the H1 time frame, right? This is the H1 time frame zone that we marked, which is this zone here, right? Now you see now that as we marked it, we drop to the 50 minutes time frame, because if you go to the H1, let me show you guys. This is the H1, right? This is the H1 time frame. This is the supply zone that we have marked here in the H1 time frame. So you just simply drop to what the smaller time frame, which is the like the 5 minutes time frame, and you are going to realize that price will be heading up. Now when price start heading up, what you do is what? You wait for price to break structure. All right, so let's just make this a little bit faster. All right, so if you notice, you are going to see that price creating higher highs, series of higher highs and higher lows. You can see it clearer if you go further, like to the 1 minute time frame, all of that. You see price creating higher highs and higher lows, higher highs, higher lows, higher highs, higher lows, as it taps to this zone here. Now you are going to mark out these zones here. This is the previous low that price created. This is another previous low that price created, right? So now what we are doing now, we are expecting price to come back and break through, right? So when price breaks through, we are going to wait for confirmation for price to come back and tap our zone, right? So let's see. All right, now price broke structure. This is what we call change of character, right? Because after it created this high, low, high, low, high, right, it came back now and broke structure. And when it breaks structure, what you do now is, from a smaller time frame perspective, what you do is you identify our own supply zone on the smaller time frame. Because if you look at it very well, you see now that we had only bearish candles that are formed here, but now price has left behind one bullish candle up here. This bullish candle actually is what we are going to wait for price to come back and test on. So this bullish candle is the only green candle. Remember the concept we applied in the bigger time frame. So what you do now, you wait for price to pull back and test this zone here, because it has broken structure, what we call change of character, right? So now you wait for price to come back and test, and then you sell here, and then you'll be targeting zones far below at the previous low. You can still use the 1 minute, the whatever the 1 hour time frame to use as your target, right? So this is the 1 hour time frame. Remember, we're doing that demonstration on the 5 minute. So price has tapped, came down, and then book structure. So let's go back to the 5 minutes time frame, and then let's see how it plays out. Okay, so let's see price, wait for price to go back to our initial zone, or go back to our our 5 minutes supply zone, and tap to the zone where we'll be looking to be entering. All right, price tap to the zone, so we enter here at this level, and our stop loss is above there, and our target below there. So let's just reduce this so that there should be not too much noise. Okay, so what happened now, you enter, now we are stop loss. Remember, you have waited for confirmation, and then you want to be targeting this zone below here. So let's see. You can see price is dropping powerfully. Price is dropping, so you're already in very deep profits, because here we enter our stop loss above there, and we want to be targeting this previous low, and price drop, so our target got hit. So if you go back to the H1 time frame, you are going to see clearer that our target got hit so clearly. So this is it, guys. So you see now that at the same thing, we entered, the first entry was our initial direct entry, the second entry was based on this, on confirmation, but all of the same, price still move the same way. All right, so this confirmation could just be sometimes to increase your entry probability, because sometimes if you enter directly, price might stop you out before coming back. So that is it, guys. Thank you for watching. I hope you found the video helpful. Please, if you have not yet subscribed to this channel, you are new, just hit on that thumbs up button, hit on the notification bell, so that anytime I bring a video, you are going to be the first to get a notification. Thank you for watching, and see you in the next video.